Welcome to Profile Traders. This is Reza. First of all, let me start by wishing everybody a happy new year, and I am very confident that 2015 will be a much better year than the 2014 we have seen. For today analysis, since it's the beginning of the year, I am going to analyze our instruments from a daily chart so that we can see pretty much in the big picture where we stand, and for the remaining days of the year we will go back to market profile to get a more detailed view of things. So what we are looking at here is the chart of ES. You don't need to be a rocket scientist to realize that it has been now almost 6 years where we have seen a direct intervention and manipulation of the market by the Federal Reserve, and this market has climbed on the back of every possible worries and negative impacts that should have otherwise influence the market on the downside. So now the question is, going into the 7th year, will this pattern continue? If this pattern, in my opinion, continues at the rate that it is going, it will not be stopped, and it will only be stopped by a very nasty crash. On the other hand, if this is not going to be the scenario, we are going to see a potential retracement of this whole colossal mega move that we have been seeing the market taking from 1553 all the way to 2050 right in front of your eyes. So if we do not continue this craziness, we are going to see retracements. So let's look at a little bit what we can draw here. First of all, we will be drawing the current trend line, which is the one that is dominating the short-term trend. Therefore, until we do not break below 20 or below 2000 to this low here, so between 1965 to 2000 will become our very significant area of support. If this level doesn't hold, then the next drop that we will see should take us towards 1900. Also, on the upside, it is possible to project a little bit of a resistance by combining these two tops here. Therefore, now on the upside, one should expect to encounter resistance coming between 2100 to 2110. So again, for anything bearish to happen, we need to have price exiting clearly out of the range of 2000 to 1965, and on the upside 2100 to 2110 is resistance now. If we do break below the 1965 to 2000, then we should expect a drop to come challenge 1900. But even if at 1900 we do see price there, it is really not much considering the fact that we have had such a colossal run all on pure simple market manipulation from the Fed. Will they continue into the 7th year or not? is to be seen. Another thing that I would like you to look at is that from here on, every time that we made a higher high, it has been done on lower volume. And obviously, this time around, with this all-time high that we reached, the volume divergence is the most grotesque of all of them, which is definitely potential for warning going forward. So that's what we stand with ES. Let's now bring the chart of gold and see what's going on. Gold is in a very important consolidation pattern, and this consolidation pattern is calling for a very colossal move to come. We can border the consolidation by hooking these two ones, contact point down there, and then we can go put in the contact points on the upper part. And as you can see now, we are dealing with a symmetrical triangle, basically telling you that the highs are higher lows and the lows are lower highs. So which either side of these two parameters it will exit, the move should be quite violent. On the downside exit, we should be looking at 1160. So anywhere now between 1160 to 1150 will become critical support for gold. If that breaks, it could become extremely violent to the downside. On the upside, we are dealing with 1240 to 1250. If we do exit out of that, the first area that we will come and challenge will be right around 1300. So when you are in such consolidation, expect a battle, expect violent ups, violent downs on a flip of a corner, because market is now in a battle mode in order to decide if it wants to exit above 1240 or if it wants to break below 1160 and then collapse. My personal opinion is that it should break to the upside. I believe, and I kept on repeating this last year, that gold is one of the most oversold asset that there is out there compared to everything else that is in a state of a bubble, and the potential to outperform this year after 2 years or more of constant drop, it should definitely be breaking on the upside. So watch for the two levels that we just talked about here and see which one or which side will break. Now the collapse and the crash in crude. Again, if I put a chart of ES against this, you are going to see the exact contrary. A parabolic up in ES and a cataclysmic collapse in crude. No doubt that at the stage as we are, it's in a very severe downtrend. We can probably set the most valid of the downtrend that should dictate price. Therefore, in the big picture, any time that crude will approach area of 61 to 63, it's going to start to encounter significant resistance. So let's put a line more or less. So that area will be definite resistance. On the downside, it's hard to tell. However, if we look at the events that are taking place here, we can see that the big red candles, long and powerful, which were all signs of outflow of money from this market, is now shrinking. And we can also notice that we got a bit of a consolidation going on, where markets try to find itself a little bit of a floor or a bottom, and now it's drifting down, but nothing really majorly violent. This is all sign that potentially between here to 50 it is going to build a base, but it is absolutely nothing convincing yet, and there is no way that one can conclude that oil has found support here. Therefore, it's still in a discovering mode to see what is low enough that it would shut down selling. We haven't seen that yet. Therefore, expect either more consolidation at a tight range down here, or possibly a flush, one last selling that would go take below 50 very briefly and then come back above it. But I do not see any major reversal or anything exceptional on the upside taking place, unless it is totally and immediately related to outside event and geopolitical news. Therefore, right now 60 is a little bit far away, but if it gets into the area of right now 55 to 57, right in the middle of this consolidation, we should start to encounter already some resistance. So until we do not see evidence of bottom being built, it is looking terrible, with taking into consideration that after such a big drop, it wouldn't be abnormal to see the massacre slowing down a little bit at these levels, and market trying to find itself a little bit of a support at these bottoms. So let's see what this year brings. Should be a very exciting year, internally, externally, and looking forward to it. Happy New Year again, and talk to you on Monday.